Hello, everyone, and welcome to today's Manage Your Money During Coronavirus webinar. This is held in conjunction with the NOLA Public Libraries. This is the last webinar in this 5-week series. The next iteration of this is going to be starting next week with the NOLA Public Libraries Summer Fund Series. If you want to find out more about that, please check out our website, www.flightcoaching.com. Or you can like us on Facebook, just searching Flight. My name is Alexander Bigby. I am the Executive Director of Flight. We're a New Orleans-based nonprofit that helps create free financial education resources for communities and individuals around the city. Today, we're going to be having a presentation that should last around 20-30 minutes, and then there'll be a Q&A afterwards. Everything is being recorded and put on our website. It'll be within 24 hours, and the presentation will also be available on our website within 24 hours on the webinars page. If you have any questions during the webinar, please type them in the comments box, and then we'll get to them at the end of the presentation. So I'll hand it over to our fantastic speaker, Tracey Textor from Home Bank. Tracey, great to have you with us.
Thank you so much. We had a really great time last week, so let's see today. This ought to be good.
Thanks.
All right. So are you doing it today or me?
It's you today, isn't it? For budgeting?
All right. So let me do this.
But yeah, if you want me to do it, I can open it up. But
oh wait, it says host disabled attendee.
Let me just change the setting quickly.
Okay.
All right, you should be able to share your screen now.
Okay.
Great.
All righty. All righty. So, as Alexander said, today is our Budget 101. Wait just a sec. And my name is Tracey Textor. I'm with Home Bank. I have been a loan officer here for a little over 25 years. So home buying and budgeting goes hand in hand. So just to give us a quick overview on what a budget is. A budget is an estimate of income and expenses for a set period of time, a roadmap, or a financial plan. And why would you use a budget? Honestly, it fits in every aspect of your life. Whether you're a high schooler and you're getting ready to go to college and you need to set up, some type of budget for you to know how much you're going to get each month, how much you're going to spend. So you always want to watch what you're spending. You want to try and create some sort of savings plan or pay off debts as you get older. And when you use it, it's really to help you maintain good financial practices. And it's going to help you achieve a specific goal. And as I said, this goal can start as young as when you're in high school and you're working to save either your first car or buy new clothes or whatever it may be, as you progress in life and you're looking to purchase a home or looking to purchase a new car, or even just have a savings plan if you're trying to get out of debt, if you're trying to pay off student loans. So budgets are used for, as I said, every aspect of your life. It's just a matter of what goal you're working towards. Some of the obstacles to effective budgeting is probably everything we have all done in our lifetime, if we don't still do some of them today. Number one is lack of discipline. And you do need to be disciplined to do this because nobody else can do a personal budget for you except for yourself. Thinking that it doesn't matter. Kind of fly by the seat of your pants, just going along, you get paid, you pay this, you pay that. family or others will send me money. Maybe not so much they will send you money, but if you feel like if you need a bailout, sometimes they will. Sometimes that goes hand in hand with irresponsibility, kind of just ignoring it. Or always counting on annual as far as tax refunds and birthdays and holiday money. If you ignore something, counting on or relying on funds from another entity, meaning not your job. You know, tax refunds, again, we hope we get one every year, but you don't know, or you don't know how much it's going to be. Birthday money, holiday money. What if you don't get money? What if you get gift cards? You're hinging it on the future that you cannot dictate. And as far as student loans, when you're young, and I see this so many times, people, oh, I can get my student loan and it's going to cover everything. Well, the problem is those loans are going to come due and payable at some point in time. And it's going to cost you more in the long run than if you would have just handled everything at the right time. And another point with student loans is they never go away. It is a federal debt. It is just like paying taxes. Those are not forgiven. They are not written off. They will always be there for you. How to build a budget. When you're building a budget, there's 5 aspects that you really want to work on. It's going to help. You're going to need to get organized. You're going to have to list your income, list your expenses, your savings, and your debt. So to go a little bit deeper in those, get organized. You need to locate and organize your financial documents, whether it's bills you pay each month. You want to have those in a stack. You want to know when you get paid, you usually know approximately how much you're going to be paid each month. So you want to have that. Something, if maybe you owe taxes, you're going to kind of anticipate that. So you really want to locate and organize your financial documents. When you're listing your income is money that's earned each month after taxes from paycheck, Social Security, or other means. So you're going to now list everything that you have, all money that you know you receive every month. We're not talking about money that may come for a birthday when you're anticipating what you're getting. We want to know actually what you're going to receive each month. When you're listing your expenses are not just going to be considered credit card debt, which is number 5. When you're thinking about expenses, you want to think about what you spend each month. And you're going to try and figure out approximately how much you spend. If you have an internet bill every month at $60, you know you're going to have that. Your cell phone bill, your car insurance. You're going to kind of estimate, maybe watch for a month or so, how much you're spending on gas, how much you're spending on groceries, your rent, things of that nature. Expenses are going to be what you spend every month, and you have a good idea of, you know, what it is. Savings. How much money is set aside for savings? Right now, you may not be saving anything. And that is why you want to try and list it. I myself, if I don't write something down, whether it's for work or whether it's for home, I'm just old school. I have to write down. And if I write it down, it's going to be taken care of. And then your debt. Your debt is going to be your creditors, whether it's your car note, whether it's student loans, if it's credit cards you have. A debt is something you owe someone else that you have to pay each month and how much you're going to pay them. When we were talking about the getting organized, important documents you're going to need are your pay stubs, your bills you pay each month, meaning like your utilities. Receipts like groceries and gas. You can save those because that'll help you look at and write down again how much you're approximately spending each month. Now, those aren't going to be exact every month, but it's going to give you a good idea. Loan statements, whether you have a signature loan with someone or a little personal loan somewhere. If you do own your own home already, or if you have a car note, things like that. Credit card statements, Social Security, social benefit statements, meaning Social Security. Maybe you received disability. Maybe you have a child that received disability and you do receive funds and statements from them. And lastly, your bank statements. A bank statement is another way that you're going to reflect exactly what goes out of your account each month. Again, for me personally, I rarely use cash. If I have cash, it's going to disappear and I won't know what it was spent on. I need to use a debit card or write checks or run everything through the account so I know exactly where it's gone. Number 2, list in your income. All sources of income for the past 3 months is how you can average what your monthly income is. Again, examples: employment, student loans, checking account, savings account. That's ways for you to see everything that is coming into your account, into your hands. Expenses. Again, expenses are going to be review your bills and expenses for the last 3 months. When you're writing your list, maybe divide the sheet of paper, if you're doing it on paper, what's necessities and what's wants. And in that way, you can see what you have to have covered each month and then things that you want to do. A want would be maybe going out to dinner or going on vacation or buying new clothes or that new purse or shoes. So you want to see how you can divide up and really look at what you're spending. Savings, again, you may not be putting anything aside. That is probably the last thing that you do for yourself. Most of us want to pay all our bills first, and then before you put a savings away, you're usually spending it on something else. If you truly want to start a savings account, you really want to try and put that aside first, no matter how little it is. There's something that comes around on Facebook at the beginning of every year, that for the 52 weeks of the year, they want you to start saving. So on the first week, you may put $1 in a savings account. The next week, you might put $5. The next week, 10, and you're gradually building. But if you make that an account that you truly don't touch, by the end of the year, you can have a good little savings. And the amount of money that you're putting away each time, you're not going to really feel it. Even if it comes to you starting with all your change, never spend your change. You know, have a bucket, put all your change in there and save that for a year. Don't take anything out of it. And you would be amazed at what ends up in that bucket. And then, as I said, your debts, you want to pay those. But the only way that you're probably truly going to start your savings is if you start with that. If you get paid $100 and you even put $5 of that away, the $5 isn't going to make a big difference on what you have, but when you watch it accumulate and build up, it would be amazing how much that $5, just that initial $5, is going to build up to. Traditional budgets. And again, it's really just what I've been saying to you, how you can do it. And it's when you see it on paper, that is when your eyes really open and you become aware. You want to look at exactly what you have. So on the left side would be a blank one that you could fill out. A sample one is on your right. You know, when you're looking at, now this person, they get an investment income and $100 in gifts. I'm sorry. And so their total income a month is $20.21. Well, when you go through and you're looking at what they're spending, their total fixed expenses or $1,395. And again, your fixed expenses are items that you know you have to pay every month. Your rent, books and supplies, your utilities, taxes if you have to pay taxes, transportation, meaning your gas, your credit card payments. So all of this person's adds up to $1,395. When you look at their variable expenses add up to $620. So when you look at this on paper, they only have $6 in discretionary funds. And that's scary when you look at that. But it also makes you more aware of areas that maybe you could cut corners on if you need to. Dining out. Yes, it's great to dine out, but, do you have to spend $100 each month on it? When you look at subscriptions, maybe if your goal, you want to start saving, maybe instead of the subscriptions, you're saving that $20 a month. So like I said, it's just really eye-opening when you add everything up on paper and you see how close you're living each month. And that is why this person would benefit from the budget, so they can see each month. As with everything else, budgets have rules also, and there's a 50-30-20 rule. So 50% of your income should be your needs, your grocery, your housing, utilities, your insurance, your car payment. That should total 50%. So if you make $2,000 a month, $1,000 a month should cover every essential that you have there. Your 30% is your wants. Your 30% can be your shopping, your dining out, your hobbies, but you really want to try and keep that to 30%. So if you have if you have $2,000 a month and 50%, that's $1,000 for your needs. Okay, you're now gonna have $400 for your wants, and then the balance is for your savings. When you're looking at it that way, I know it's scary to think, how can I save that much money? But when you put it down on paper, and if you can pull your savings first, as I keep saying, it's amazing on how it can build for you. Now, as for another way that you can budget is called the categories. Categories method is a more detailed breakdown of percentages and categories. So in this one, as you can see, we had 3 categories previously, 50-30-20. Now, when you look at this, it is really going in depth on this. So 30% for your housing, 10% for utilities and housing expenditures. And that would be like if you have someone cut your grass, anything to do with your home. 10% for groceries, 10% for transportation, including a car loan. That is probably the toughest one for most people. It is very difficult for you to cap your transportation cost at 10%. Again, on $2,000 a month, that would be $200. So $200 is what they really want you to have in goal so that you can budget yourself and still have room for savings. 10% for debt repayment, 10% for savings, 5% for car insurance and auto expenses, 5% for clothing, and 5% for entertainment. As I said, this is an extremely detailed breakdown, but sometimes we need that because, again, on paper, it's much easier to follow something if you write it down on paper and then you try to abide by that. Setting financial goals. When you're looking at financial goals, you're going to have 3 different areas that you're going to work towards. Your short-term goals, your medium goals, and your long-term goals. Your short-term goals are going to be something that you're trying to work towards within 6 months. So for a short-term goal, it might be starting a savings account. Or maybe it's that you want to start a savings account, but within 6 months, you want to achieve $500. Medium-term goals are 6 months to 2 years. It may be how much you want to save. It might be that you're trying to set up a budget that includes saving so much per month. Another goal may be home ownership. You know, if you start setting your financial goals, studying your budget, your goal might be to own a home within 6 months to 2 years, or it might be to move out. But that would be a good medium-term goal. When you're looking for your long-term goals, of course, it is going to be savings. Savings is a big aspect and a big reason why you have budgets. But your other long-term goal is you're not always able to live for today. You have to think about your future. You have to think about retirement, how you're going to live. Knock on wood, nothing happens to you, but what if something happened and you couldn't work? Prime example right now with the COVID situation. With COVID right now, so many of us are either not working cut hours, and it's just something that, like I said, probably 75% of the people were not prepared for. And when I say that, not about the COVID, but about being prepared for having an emergency, having a nest egg, an emergency fund that you can fall back on. So that's a couple of ideas on why you would have your short, medium, and long-term goals. But again, all of this is catered to you and what your needs are and what your goals are and what point in your life you're at right now. SMART goals. SMART is an acronym, and your 5 are specific, measurable, achievable, relevant, and time-bound. A specific goal. State what you're going to do. Use action words. I am going to put $10 away every Friday. You don't want to think about it. If I can is not specific. I am going to is specific. Measurable. Provide a way to evaluate. Use metrics or data targets. Again, it's a monetary amount. It's going to be easy to measure. If you're going to be, if you have another goal, and it may not be easily measured per se as far as money, but you want to look at a specific target that you're working towards. Maybe it's that you're paying off a credit card and you can see every month that you're doing it, that you're paying so much on it, it is decreasing. So that's a measurable goal as well. Achievable, within your scope. You want it to be possible to accomplish and attain. I keep going back to the savings, but you have to be realistic. If you say you want to save $500, it's probably not realistic to say you want to save $500 in the first week. You want to save $500, it could be the first month, it could be within the first 3 months, or a 6-month goal. But make it achievable in your life. Yes, we want you to set a goal, but we don't want it to be unattainable. We want you to be able to achieve it and feel success with it. Relevant. Relevant means it makes sense within your job function, improves the business in some way. And again, it's not just your job, it's in your personal life. So you want to make it something that you're going to benefit from. It is relevant. You want to take if it's in your job, you want to take certain classes so that you can be considered for the job promotion in 3 months. You want to do something that is going to improve and be relevant in your life. And then time bound. State when you're going to get it done. Be specific on a date or a time frame. Again, if your goal is to be able to apply for a new position within your job, then you want to say, okay, I want to complete these classes within 3 months. I want to, again, go back to the savings. 3 months, I need to have this. But you need to keep your goals smart and smart to you. What's smart to you may not be smart to me. So it's individualized on how you are going to handle your goals. Another way to achieve a budget is paying off debt. You want a strategy to pay off debt. That's the ladder method. You want to list all your debts from highest to lowest interest rate. Based on the budget, determine how much you can allot for each debt reduction. Ensure that your monthly minimum payments are met for each debt category. But then, when you have extra funds, you want to pay it towards the card or the debt that has the highest interest rate loan. When doing this, 9 out of 10 times, the highest interest rate loan or card is going to be the one with the highest payment. And that's why you're trying to attack that one first, if at all possible. The snowball method is actually completely flipping it. You want to list your debts from smallest to largest balance, okay? You want to ensure that your monthly payments are met each month, but you choose the loan with the smallest monthly balance to pay off first. In my life personally, that's how I do it. Only because I like seeing the small debts disappear. And once that one's done, then the money I was paying on that debt is now going to the next one. It may not always be the smartest way to go, only because if you have a large outstanding debt on that high interest rate, it is going to take you longer to pay it off. But if you're trying to clear off things as quickly as possible, and when you do the snowball method, a lot of times this will also help increase your credit score quicker because you're freeing up the amount of credit you have available. As with everything, there's tools and resources to help you accomplish this. There's apps on your phone, every dollar. You need a budget, envelopes. There's websites you can go to, mint.com, consumerfinance.gov. I'm noticing a typo on here, but your annualcreditreport.com. Of course, there's one E in credit. If you go to that, you normally get a free credit report once a year on these annualcreditreport.coms. But right now, because of COVID and everyone in the situation we're in, you are allowed to pull your credit once a week through April of 2021. So if you're really trying to budget and you have goals that you're working towards and debt that you're trying to get rid of, I wholeheartedly recommend that you do that. Go to it, pull your credit. You may not need to do it once a week, but I would at least do it once a month in the next few months while it's free and you can do this. You go on there, you pull your 3 credit reports. It's not going to give you a score, but you're not really worried about the score at this point. You're looking at your credit reports and you're trying to find a way that you can increase the availability and pay off everything. That is truly your goal when you're budgeting and it comes to your debts. When doing this, this is going to help you maintain financial strength and help. And again, just what we spoke about. Have daily, weekly, and monthly check-ins. That way you're following everything. If you want to meet with a bank representative like myself, you can sit down, give us a call, we can sit down, we can work with you, and we can help you attain your goals. And then discussing your personal finance with a financial planner. When you're working with a financial planner, they are truly looking at your long-term goals. That is the 2 years and plus when you're dealing with financial planner. Do we have any questions this evening?
Hi, Tracy. Thanks very much for that excellent presentation and giving us your time and your excellent expertise. We do have a couple of questions here. I'll ask you. So the first one is someone's spouse works in sales. How do you budget if you don't get paid consistently? So if it's seasonal income.
That is a difficult one. And the thing is, if it's seasonal income, you really have to prepare ahead of time. You want to make sure that when times are good, that you're trying to stash as much as you can. In situations like that, you may want to try and target and save a little more than you normally would to prepare you for the times when it's not. Whether he's a seasonal worker, whether he's a salesman and maybe he sells built-in supplies. Well, probably spring and June are really great, but around the holidays, it might be slow. So you really have to prepare yourself and try to budget, okay, we're going to save this much more because we know come October, November, it's going to be slow. So it's more being prepared as maybe a medium goal. It's not going to be within your 3 months. You're going to be looking for something that can cover you for your looking ahead to your 3 to 6 months. So that's the main thing when you're on commission or when you're a seasonal worker, is when you have good months, at those times you really have to try and stash as much as you can.
Great, thanks. You touched upon this a little bit in the presentation, but someone was asking, what are some online resources that make it easier or less daunting to budget?
Probably go back, bear with me a sec, let's see. Oops. Let's see here. I'm looking to see what slide I was on. Okay, here we go. I'll sit on this one for a little bit, but check these apps. You can do these apps on your phone. The Every Dollar, the You Need a Budget, the envelopes. That's something that you can do easily, just whenever you spend something. If you don't have an app even, you can even write it in notes on your phone. And then when you get home, if you have a website on your computer at home, or if you're doing it on paper, but at least take the time as you're going to write down. And then, you can even go so far as keep a pad and pen in your car and write down if you've gotten gas, if you drove through Raleigh, something like that, and then review it once a week and add up your weekly expenses. And that might be a good way you can start as well.
That's great, thanks. Yeah, just to add to that, so I use Microsoft Excel for my budget. So there's a whole bunch of different templates you can download if you Google it. And you can find the one that kind of works for your situation. And then I go back to that budget every month or two and just check checking whether it's accurate.
Just try to see exactly. And especially if you have a goal on your budget, you want to go back and see, am I attaining that? Do I need work a little bit harder in one area than the other? But yes, it's very, like I said, it's discipline is the key. You have to be able to discipline yourself to stay on top of it.
Mm-hmm. Completely agree. Another question here. Should I focus more on building savings or reducing debt?
That's a tough one. The reason why is they kind of go hand in hand. When at all possible, you do want to put something away. But the only way you're going to be able to increase that savings in the future is if you are paying off your debt now. So when all possible, still put something away as a savings, but know that as you're paying down that debt, you're freeing up more of your liquid monthly income that you can save. So I'd say do a minimum on your savings, but really concentrate on doing away with that debt if at all possible.
Right. Does anybody have any more written or oral questions? They can feel free to unmute your microphone and ask the question if you'd like. If not, then I guess we can call it a day there. Tracy?
Well, thank you all so much for taking the time and spending your a little bit of your afternoon with us. And if you have any questions, Alex will be saving this on the Flight site, and all of my contact information is on there that you can reach me. That's
great. And yeah, look forward to working with you on future webinars.
All right, the same here. Thank you.
Great to see you, Tracy. Take care.
Bye-bye.
Bye.
He did the whole series.